Let's talk about markets in the week ahead. Join us now, David Stubbs. He's like, am I on the Discovery Channel? This is not one of those. David, thanks for coming on. Thanks for dealing. New global head of markets and asset class strategy at JP Morgan Private Bank. I think the thing that struck me, David, that you said was, with reopening now starting in earnest, you think that's a major play. And what that says to me is that all this anticipation of a reopening and all the positive stock market activity that we've seen, that's not all there is. As it actually happens, you think there's further to go, and that could happen, I guess, as earnings actually show that improvement.
Sure, absolutely, Joe. I think there's a lot of reopening around the world still to be happening. I mean, reopening is very much a theoretical thing in most of the developed world. You were talking about France there and the recent changes. We just tactically upgraded Italy because we believe that it has the best exposure to what's going on domestically in Europe. It has a lot of cyclical sectors in that index. And if you look at the reopening in Italy, it really has lagged, even the partial reopening of some of its European peers, and the valuation is good. So if you also look at the struggles of someone like Japan, again, COVID is still such a real constraint on the economy in many parts of the world. So that factor is still going to play out, we believe, and it's going to keep equity markets on the front foot throughout the rest of the year.
Right. So, yeah, the U.S. is more open, probably, or further along in a lot of those things. But you figure as the rest of the world catches up, then we start to see that. When you worry about corporate taxation as one of the headwinds, are you referring to this global tax or mostly just what we're seeing in the U.S.?
No, I don't think the global tax should be seen as an overtly negative for investors. In fact, I would argue that global coordination that includes that creates transparency, that actually takes uncertainty about some of the other taxes off the table. The digital taxes in Europe, or any kind of equivalent tax on major European multinationals. Those would have been piecemeal, one country, one time, different rates, different rules. Any kind of global agreement on this, I actually think, will be a really nice bedrock to the international system. It may lead to some companies paying more tax, for sure, but I think overall investors should probably welcome that. When I'm referring to corporate tax as a potential downside trigger or generator of volatility, it is around the plans we see here in the United States. They're still obviously hugely debated. We don't know what we're going to get. And further out, we do see, I think, plans for major fiscal consolidations in coming years. The UK budget, for example, focuses on raising taxes a few years out. So for the next 18 months or so, I think the global policy environment is going to be pretty supportive. But on the horizon, you can see some countries itching to potentially raise taxes, and that shouldn't be the be all and end all. But if done wrong, it could hurt sentiment.
One of your other areas of concern is something that we should probably highlight just to put it on our radar screen here, because I don't think all of our investors are thinking about it, and that is the German election. What's at stake, and what would be a negative outcome for the global markets, in your view?
Well, that's an interesting one, Joe, because you could get negative or positive outcomes. Obviously, some kind of very weak government, or some period of uncertainty around Germany, which obviously has such a key leadership role in Europe, would be a potential negative area of concern. I think the market could react very positively if, for example, the Greens are in a coalition and a significant partner in that coalition, because I think it would unlock a certain amount of fiscal spending, almost like the kind of infrastructure programs we're talking here in the US. In Germany, which of course has been traditionally exceptionally reticent to expand its fiscal spending, but has just as many needs as every other developed country around both an aging population, around its transport system, and of course on the green agenda. So I think that when I cited that as a risk, it's a two-sided risk. It's something actually you could see boosting markets if you get the right outcome. And I think that's something that international investors do need to put on their radar. This is, of course, a major change. Angela Merkel going away after a decade or so, and potentially one that could lead to significant changes in an economy large enough to drive the future of Europe.
Shepard Smith here. Thanks for watching CNBC on YouTube.